One to Daily Mortgage Rates Live with the Mortgage Calculator. We'll wait just a few minutes to get started here. Let us go live on all the different platforms. We are streaming this live on YouTube, Facebook, LinkedIn, and Instagram as well. While we go live on all the different platforms, we do have the chat pulled up, so feel free to drop a comment there in the chat. I see a couple people were already dropping comments. Good morning, everyone. Ready to get started on a new week after the holidays, or the holiday, I guess I should say, or maybe two holidays because it was Father's Day as well. But thank you, everyone, for tuning in. I see a couple comments coming through here. Nicole, Robert, Mark, Samantha, Levine, Jason. I'm not sure who the Mortgage Wizard is, but that's a cool name. I like it. Just give us 1 minute here while we get started. Got Adam and Adam, two Adams tuning in. Thank you, everybody, for jumping on. All right, it looks like we are good to go, so we can go ahead and get started. We will take the chat off the screen here so we can get into it. So welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche. Now, this show we do every weekday where we go through the rates for actual programs here, the live mortgage rates, and then we do a deep dive into a different topic and pull up some quotes for that and go over it a little bit more in depth. Today, our topic is going to be USDA loans. So we're going to do a little deep dive into that. But before we do that, let's go ahead and pull up our pricing tool and go through the actual live rates of different programs today. So Nick, why don't you pull up our pricing tool for our mortgage professionals for our team? They are able to use this tool to give you rates in real time. So if you are looking for a loan, you can go ahead and contact our team. We have over 320 loan officers all across the country. But Nick will pull up some general scenarios. But if you do want to quote on your specific scenario, you can visit us at themortgagecalculator.com. So Nick, let's go ahead and pull up the pricing tool and go through some general rates here today.
All right, let me switch my screen and we'll get started. So as Kyle mentioned, this is our pricing tool. Let me make it a little bigger. There we go. This is our pricing tool for our team of mortgage professionals. So if you'd like a full loan estimate, this will show us the general rates and the APRs that have the all the fees included. But if you'd like a full loan estimate with all the fees broken down into all the fees that are itemized into there, please get with our team. We would be happy to do so with over 300 loan officers. And we're licensed in 24 states for primary and second homes. And we can do our DSCR business purpose in 44 total states. So for our demo today, we'll set up a nice, easy scenario and compare across the basic programs. So we'll set all of our demos today to 400,000 loan amount. We'll set the LTV to 80% loan to value. That means 20% down payment. We'll set the desired price to 99. That means we're going to tell the computer to find the best rate at one discount point in cost. That's the typical requests we have today. So that's what we'll do for our scenario. We're going to run through a couple programs. First, we'll go through conforming conventional programs. Then we'll check out the FHA rates today. And then we'll go through expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs using alternative income. So for our first demo, we will select the conforming. We don't do the VA or USDA, but today we're actually going to do the USDA live. VA is only for our eligible veterans and active service members. We will do that later this week. Go over that in detail. But if you are eligible, we'd be happy to quote it, but not everybody is. And for USDA, we'll do the deep dive in a minute here. So we'll start with conforming, conventional. We're going to set up a purchase, 30-year fixed loan, pretty standard. We're going to do primary occupancy, single family home, 1 unit, State of Florida, County of Miami-Dade. And for all of our demos, an estimated FICO score of 760 and an estimated debt to income ratio of 40. So with these basic settings that we'll use for all of our demos, let's check out the this morning. There we go. It's frozen for a minute. Sorry. All right. So best option the computer found here looks like 6.75 rate for 1 discount point and cost, and a final APR of 6.917. So a little better than it was last week. We skipped a week here, but we were just over 7 on the APR for the conventional program. So now we're just under 7 here, 6.917. Remember, to compare apples to apples across the different programs, we're always going to use the APR, which has all of the fees included. And if you'd like a full loan estimate again with all those broken out, let us know. But this is the actual cost. So if our customer doesn't qualify for conventional for any reason, typically the next option we always check out, we'll set up the same scenario. Next option we'll set up is FHA. And that's because FHA has a little more leniency on credit events as well as a higher debt to income ratio. So this is typically the next option. We'll keep everything else exactly the same as our previous demo. And let's check out the FHA rates so we can compare apples to apples. So FHA's a little bit lower on the rate, but always compare the APR. So remember the 6.00 rate sounds great. 1 discount point in cost sounds great as well. And the final APR here of 6.592. So in this scenario for this borrower, if they qualify for both conventional and FHA, FHA is actually a little bit cheaper in this scenario. And that has been the case recently with the changes to FHA. So even if you qualify for conventional, definitely recommend to check out FHA. It could actually be a little bit cheaper. And this APR does include the upfront mortgage insurance and yearly mortgage insurance that is required for FHA, and it's still a little bit cheaper. So definitely recommend everybody check out the FHA options. Now, where we really love to shine here at the Mortgage Calculator is if our customer has any trouble qualifying for conventional or FHA. Many other banks and lenders don't have other options, but that's where we love to present our additional 5,000 loan programs under expanded guidelines, aka non-QM, where we can use alternative income. So when we select the non-QM, everything else will stay the same, but we have a new option that pops up that allows us to change the income that we're going to use. So full docs, what we have to use for conventional and FHA, that's 2 years of tax returns, what most people are used to. So we'll typically select one of these non-QM programs in order to select an alternative income method. So we have asset-related programs, business bank statement programs. For investment properties, we have some specialty programs we'll talk about in a minute. Personal bank statements are most popular by far. RSU, stated, VOE, 1099, P&L, no income at all kinds of different options. But for our demo today, our most popular option is our personal bank statement 12-month. And that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, have various write-offs and other things that may not allow them to qualify at all, or may not allow them to qualify for as much income as they wish to purchase that home that they really want. So in this case, instead of using 2 years of tax returns for income, we're simply going to use their last 12 months of bank statements to determine a debt to income ratio of 40%, in this case, using their actual cash on the bank statements. So for most self-employed borrowers, that allows them to qualify for double, triple, or quadruple the income as a full doc loan. So typically this solves our problem for our self-employed borrowers. So we love these options. So with everything else staying the same besides the new income, let's check out our non-QM options today. So the option at the top of the list here, 7.25 rate. The rates are always going to be a little bit higher on the non-QM options, obviously, for 1.5 discount points and costs and a final APR of 7.333. So remember, conventional was just under 7, and here we have a non-QM using totally different income methods that's at 7.33. Very comparable, right side by side there. And you saw the FHA come in a little bit lower in comparison across the APR. So definitely recommend if you're a self-employed borrower or have any trouble qualifying for FHA or conventional, we have the solution for you here. And there are tons of different options. You'll see here we have dozens and dozens of options. Some of these at a higher rate may allow things like a bankruptcy or a foreclosure. So some of these may allow us to qualify borrowers for other types of events that would disqualify them for these standard programs. So definitely recommend get with our team. They will find which one of these dozens of programs works best for you. Now, before we go into our USDA example, we always want to do live rates here with the tool for investment properties. So for our next couple examples for live rates, always want to select investment property occupancy. We'll set up the same scenario as all our other demos here, 80% loan to value, 20% down payment. And we're simply going to compare our investment property options, which we only have two. We have conforming conventional, and we have expanded guidelines non-QM. Remember, FHA, VA, and USDA are only for primary homes, so not eligible for investments. So first, we will click on conforming conventional. Keep everything else the same as our other demos. Notice the only thing we've changed here is occupancy. And let's see what the rates are today for conventional. Now, as we say every day, the GSEs that do conventional loan programs have added loan level price adjustments, aka penalties for investment properties. So unfortunately, we don't find any options for one discount point. So the best option the computer did find was 7.25 rate for 3.25 discount points and cost, pretty hefty there, and an APR, final APR of 7.492. So obviously investment properties are more expensive here for conventional. So these are great options, but many times our investors don't want to pay this high of discount points. So conventional, we're kind of at some limits here where we can't find any options for one discount point in cost, which is what our typical investor would like to pay. So our investors would like to save this $13,000 in this example and invest in other investments. So that's where we love to present our non-QM options. So for the final live pricing demo, you set up investment, set up 80% again, so it's all the same. And we will select expanded guidelines non-QM for the final demo here. And we have a couple boxes to fill. First, we need to select our income verification for our non-QM program. And the most popular option by far, and our most popular loan program here, our flagship product at the Mortgage Calculator, is the DSCR program. And that's because it doesn't actually require any income or employment from our borrower. We're simply going to use the estimated rental income from the property we're purchasing in this case to determine a DSCR value. That stands for debt service coverage ratio. So if the estimated rents can cover the expenses of the mortgage, the PITIA of the mortgage payment, that is a ratio of 1.00 or higher, aka the property cash flows on a monthly basis. But we also even have options for a DSCR ratio under 1.00, aka the property doesn't quite cash flow on a monthly basis. So tons of options. So for the demo, I will remove this so we see all the options, but we have them all available. And the final thing we must select on a non-QM investment property is a prepayment penalty that is standard. So we always select 3 years. We can select 0. That will cost more and limit the amount of loan programs. And same with 5 years. That will save us some money in some cases, but not all loan programs allow 5 years. So in order to show the most common and the most loan programs, we will select 3 years as the standard option. So with these basic settings, let's check out the DSCR this morning. So obviously it's going to be a little bit higher rate, but solving our problem for our investors. So 7.875 rate, our investors don't mind going up in rate often if the property cash flows, but we've solved the problem here of discount points. 0.850 in discount points is only $3,400. And in our example here, our investor saves $10,000 in extra costs that they can employ elsewhere to other investments. So this is typically the program our investors will select. Even though it's a little higher rates, they want to save cash out of pocket. And the final APR here of 7.937. So it's very comparable. Remember the conventional was 7.4 something, I believe. So we're right there in the ballpark here with a DSCR non-QM example, no income, no employment. Our investors can do 1, 2, 5, 10 of these loans at the same time to refinance multiple properties, purchase multiple properties. So a ton of flexibility afforded within these programs. I'd say over 90% of the loans that we do where a customer qualifies for conventional or DSCR will typically choose DSCR for the flexibility it affords and obviously saves them cash out of pocket to employ in other investments here. So a ton of different options that we have. You'll see different DSCR values on these different options. We'll see some different prepayment penalty options, standard prepayment, fixed 5% prepayment. A lot of these different options at these higher rates may allow things like short-term rental income or bankruptcies or foreclosures. So there's dozens and dozens of options here. Please get with our team. They will find the one that fits best for you. Now, let me switch my screen up and get into our live demo for today, which is going to be on USDA. So I guess I'll just pull up my example here instead of the graphic. Oh, I can put the graphic up actually and then take it off. So let me pull up our topic for today. For those of you that joined us earlier, we're going to be talking about USDA loans. So these are loans that are for properties that are in a USDA eligible area. It's real easy to look it up. You can just Google it. They have a live interactive map for the RDA that shows you where the properties are. So our loan professionals, I'm sure you guys have all visited there, but even our borrowers can quickly see if a property you're looking at is in a USDA area. If it is, these are some amazing loan programs that are eligible. They're a little bit different. Obviously, the first step is the property must qualify, but then there is a little bit different qualifications for the borrowers, a little bit different way to run the qualifications. So please get with our loan officers here. They'd be happy to walk you through that and run that approval for you. So with the basic qualification of the property has to be in an eligible area, and then of course our customer has to qualify otherwise. Let's go ahead and let me just get the graphic out of the way and check out our demos here. So here's a purchase example that I put together. The big ticket item here for USDA is, since it's a government program to encourage rural housing, right? It's by the Rural Development Agency. It's a specific initiative to encourage or rural housing or refinances, of course. But the way they encourage that is by allowing some great programs, such as 100%. So most people that want to go for USDA are going to be looking for 100% purchase, which is a great option. Let me go ahead and refresh this actually, see if I get my note. Yes, 100% purchase example. I didn't put any really specific notes here. This example, let me scroll down, is for a $500,000 purchase, $500,000 loan amount. And we have some great rate options. So similar to conventional, our par rate here, zero cost, is right around 6.75. And we can even buy it down all the way to 5.625 rate for a decent amount of buy down there. That's about 2.5 points of buy down. But since it's 100% financing, this is a great option for our customers that are looking in those areas and maybe want to get a great rate here. And instead of spending money on down payment, can buy the rate down a little bit. So even though I wouldn't want to recommend everybody buys down the rate this much, when you're doing 100% financing, it is a great option there. So of course I didn't look at the property. I just put a general Florida address there. First step, remember, to every USDA property is making sure the actual property is eligible. Just like you see on this map here, this little green could be eligible, whereas right across the street, this gray could not be eligible. So remember, actually type in your property address. Just because a zip code has some eligible areas, you have to be shopping for a property that actually codes as a USDA eligible area. Now, one of the other options here that are very popular for the USDA that I just wanted to highlight, there's a one-time close option too, which I didn't get a chance to do because we're doing that later this week. But the other most popular use, I would say, for USDA is for manufactured homes. Many times in those rural areas, the homes are manufactured, or you can even do a one-time close and put a manufactured home in a rural area. That's a great option for our one-time close, which we'll go over later this week. But we still have some great pricing on just buying an already established manufactured home with 100% financing. So it's a little bit more expensive, obviously manufactured, a little bit more rules to jump through, hoops to jump through. Most of you know about that, but these are great options. The example here, it looks like a cheaper buy down, but that's because I did $250,000 purchase price, $250,000 loan amount here, because this is for a manufactured home, which would probably be typically a little bit cheaper on average. So the best rate we could find, there wasn't a par rate here. So 6.75 had a little bit of cost. That's about just under 1 point in cost there. So manufactured has a little bit of a cost, but great options for our borrowers looking. And they can still buy it down to 5.75. Again, that's about the max buy down, about 2.5 points of buy down. So still some great rates here for USDA, and we can use it for 100%. We can use it for manufactured, and we'll go over later this week how we can also use it for the one-time close. So that is our deep dive example for today. Remember, if you're looking for a USDA eligible property, first step is to make sure it's in a USDA eligible area. Either loan officers or just anybody out there shopping can pull up that geocoder. Just Google it. It's super quick. Type in the address and you will see if USDA is an option. If it is, shoot a message to one of our loan officers. They'll quote you up an option real quick.
Yeah, absolutely. Great programs there. Like Nick said, main thing is it eligible? You can check online or one of our loan officers can walk you through that. You can visit us at themortgagecalculator.com to team up with one of our loan officer consultants, and they can walk you through this and all the other programs that we have. Now, we do this show every single weekday at 11 a.m. Eastern, where we go through the rates and then do a deep dive into a different topic every day. So we thank everybody for tuning in. Thank you, Nick, for the examples. And we hope to see you all tomorrow at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.